Good morning, Fractal Effects team. Please make sure you read the Forex disclosure. If you're following along with us today, make sure you do it in a demo account, as this is for educational purposes only. We are not financial advisors, and this is not financial advice. We'll jump onto the charts in a minute. So we do have an FOMC press conference later today. We also had news drop. So we will be avoiding the indices, any US related assets. Just looking at oil here on the left, and then we're just keeping an eye on NAS, which is at its all-time highs, just to see exactly what we're avoiding. We do have an upside expansion model, green across the board, and very bullish. Oil, again, we're red across the board, downside expansion model, which is what we want to see. Just waiting for a confirmation right now. But we are bouncing off of London's fair value gap. This thing could possibly bounce right off of this and push down. We're under the 238. We've had the cross. Still just waiting. London gave us a bearish confirmation, small retracement, extension to 1.5 standard deviations before retracing back, but we did not break the range. Let's take a look at Asia. We had a bullish confirmation, an outside the range retracement, so we didn't quite enter back into the range. And it did hit one standard deviation before coming back inside. And it only broke the range after the session ended. So we're looking for this thing to push down, preferably from this area. So that's the London fair value gap. Here we have New York. We're also getting rejection from here now. Could get a possible retracement, which we already, I guess, did, right to 61%. So we are getting an early retracement now. So when this thing does break, it will move fast. Just patiently waiting. Now as we're again at all-time highs, you never know when this thing could push down. A lot of gesticulation here, consolidation. Means it might have gassed out and wants to push back down to the 20. But again, because of FOMC, this is not a market we are interested in. Even at times when the pattern looks clean, you still want to avoid these days. They're low probability. Where again, green across the board, upside expansion model. London was bullish. Still no confirmation with the New York session, but most likely it'll confirm bullish, retracement, extension. But again, just don't want to gamble. Anything under 70% probability is officially gambling. Even with our alerts, at any point we get an alert that has a related to a US asset, we will not be focusing on that. But we do have some other foreign pairs in here as well. GBP, Euro GBP. We do have JPY against the Japanese yen. So we'll see what kind of alerts we get. But we are trying to avoid US assets. And even though you'll see the ticker says US oil, oil is usually a safe haven asset, doesn't get affected by the day-to-day news. Obviously, crude oil inventories, any black swan event, all that stuff will affect this war, etc. Right now we're getting rejection off the 61%. We've already bounced off London's fair value gap. This thing looks primed to push down. Right across the board, downside expansion model, everything's looking good. Just waiting for confirmation. We are getting that rejection now off of the golden zone, 61%. We're also bouncing off the EMAs. Once we get that confirmation, we could move quick just to take out London lows. At any point you're wondering what chart we're looking at, just take a look at the left-hand corner. Oil, NAS, looking at the CFD contract. But oil is our main focus today. Staying away from any US related assets because of FOMC, which I believe is at 2 o'clock Eastern Standard. NAS at its all-time highs. Let's just quickly take a look at US 500 as well. See if there's any divergence right now. Yep, not exactly the same. Side expansion, green across the board, taking out all-time highs. If this was an FOMC day, I've had people ask, when you have these unprecedented highs, what exactly is your TP target? That's why these standard deviations come in handy. We only aim for one standard deviation in conditions like this. There's no other highs to take out. We're at all-time highs. But again, not focusing on any of the indices today. We just have it in the background just so we can take a look, but oil is our primary focus. We want to take out these London lows. We want to confirm bearish retracement and continue to push down. We did get a early retracement for anybody joining us late. That means that when we finally do get our confirmation, it's most likely to push quickly. So whatever fair value gap is formed here, maybe we'll bounce off the bottom of the dealing range right here in the gray line and head down for one standard deviation. Today is also Thursday. Thursday's footprint is to retrace back to the weekly range, which is marked out here in the aqua line. But that's above us right now. We are red across the board. That's why we wait for confirmation. It could spike up here, come back down. So just waiting patiently. Just sit on your hands for now. Still just stuck there, just getting some more consolidation. There are people that see this as a higher low, so they're going in for a buy. There are people that are seeing the 61% rejection, so they're going in for a sell. So we're just engineering new liquidity right now. And then we'll see which side it runs. We're still under the 20. So right across the board. NAS seems to have stalled. That's a lot of consolidation there. It's been consolidating quite some time. Since 9:55. Almost an hour. About 15 minutes away from 11. Oil, still trying to figure out a direction, getting more red candles, more red wicks. We have our equal relative lows down here. Do have equal relative highs here, even though the market ran these highs and pushed down. Remember, the market hates straight lines. Now our 1 minute is green, but we're still below the 238. Most likely come up here and tap this. And this is why we wait for confirmation. Slowly digging in deeper, 61% to 79. Trying to come back up to the London fair value gap in the 238. Now again, we want to stay below this. As soon as this confirms, if we do get a bullish confirmation, even though Thursday's footprint does bring us back to the weekly range here, we'd be counter trend trading. And during this volatile week, election week, we want to make sure we proceed with caution. We will not be taking any counter trend trades today. Low probability. Still not too much movement, still getting that rejection. NAS getting close to a bullish confirmation here. 1 minute, 36 seconds left. Again, not a market we're interested in trading today because of FOMC. Pushing back up, back at that 71%. Just going to bring up Brent crude oil to see if we have any deviation. Very similar. And a couple of more swipes down here, but even more relative equal lows. No other assets have confirmed yet. We're at 71.79. London fair value gap 238. Let's see what kind of reaction we get here. Nine minutes away from 11. Continuing to push. Still playing both sides. Having a tough time getting over that. So on the TDI, we're crossing over the liquid 50 and the stationary right there, the yellow and the aqua dotted line. But again, having a tough time getting over that. Let's see if they just push this thing up, or if we drop from here. Getting a big rejection wick now. 5 minute also turned green. This is why we got to proceed with caution. Because right now they're playing both sides. Got relative equal highs, relative equal lows. Just consolidating in between. They could just run this, tap the weekly range. But again, we're not interested in a counter trend trade today. Even if 15 turns green, if we get a bullish confirmation, we're not interested. Today is FOMC. It's also election week. A lot of volatility. Coming back up, testing those limits again. Back at London Fair Value Gap. Let's see if it finally breaks through or turns around. Pushing through the London Fair Value Gap now, above the 238. Our session bias is bearish. Our daily bias is bearish. Today's one of those weeks you want to stay on trend. Let's see if it pushes through, gives us a bullish confirmation. Still driving higher. Remember, it could sweep and just come back into the range. Just waiting for confirmation on either side. Let's see if this confirmation sticks. 4 minutes, this new candle. So it swept the highs. We got 4 hour, 1 hour green as well. Three minutes left. No confirmation yet. So having a tough time getting over that, but now we're on the other side of the London fair value gap, on the other side of the 238. One minute, 38 seconds. Let's see if this bullish confirmation sticks. Now while trying to confirm, it's almost hitting the weekly range. So it could just bounce right off of this and push back down again. That's one of the reasons that we are not looking to take a counter trend today. But as mentioned before, we did do an early retracement, so whichever side it was going to confirm, it was going to move quick. 17 seconds will most likely confirm bullish. 11:04. So there's our bullish confirmation. Again, counter trend. I'm not sure we'll get much of a retracement. Let's see. even the weekly range, even though Thursday we expect to deliver back to the weekly range, we want to make sure that it's sitting in the same direction as our overall higher time frame and lower time frame bias. We zoom out on the 4-hour. You can see that we've been consolidating for the most part. We dropped low, but now we have all these relative equal highs. So even though we got a bullish confirmation, we're getting some rejection now off the bottom of the weekly range. If this thing is going to move up, it would do it from here. On a week like this, I'm not interested. Still waiting for this fair value gap to form. 20 EMA still down here. You'd want at least the 20 to get above the 238. And for this fair value gap to hold, they can meet somewhere here. But we're already at 1.5 standard deviations. That's another. So when you have a small range and our confirmation candle already hits 1.5 standard deviations, there's nothing you can do about that. And there's no point in getting in here just to go back up to here. Too small of a range. And again, that's the kind of week you can expect. Election week, FOMC. One minute, 23 seconds left. I want to see if this fair value gap stays open. Thirty-three seconds left. So even if you got in here, you wouldn't get your 1 to 3. So that fair value gap did stick. Still no retracement. There's Asia's fair value gap. We can drop in a new fib here just to see if it even retraces before actually hitting this. Two minutes, 34 seconds left. Again, we've already hit 1.5 standard deviations. And then the top part of the weekly range sits at 2 standard deviations. Still no retracement. One minute left. No other assets actually confirmed. We're getting some reaction off the bottom of the weekly range. But as we've already calculated, even if we did enter somewhere here, there still is not enough room for a 1 to 3. Our 20 EMA still under the 238. On any other day, if it was an FOMC in election week, and our 15-minute was green, we would take this. Once it came low enough though and gave us 1 to 3, so if it came all the way down here and gave us our 1 to 3 all the way back up to here. So far, not getting enough confluence. Got 15 minutes left in our stream. We're now back at that fair value gap. Keep in mind the top of our dealing range is right here, this gray line. So just a rejection off the consequence encroachment and off of Asia's fair value gap isn't enough of confluence for us. Now we're pushing deeper into the fair value gap, the consequence encroachment. Since we already had an early retracement, I don't expect it to come all the way down here. But let's see how far it actually pushes down, and if it actually wants to turn around and go back up. About 13 minutes left in our stream. Our goal is to be in a high probability trade setup within 1 hour of the range formation. Anything past that and our probabilities decrease. We want to be out by noon. So right now we're pushing deeper into the consequence encroachment, the midpoint of this fair value gap. 50% is down here. Our 20 EMA slowly getting above the 238. That's what we want to at least see. And right now the 15 is still red. Still just patiently waiting. It's already taken out these highs. We have relative equal lows down here. And we're bouncing off the weekly range. So as mentioned before, Thursday's footprint brings us usually back to the weekly range, which is marked out in the by the aqua line here. That's part of the indicator. It just paints that out for you so you know exactly where it is. So we've retraced back to it, but now we're bouncing off of it. We'll see if we want to get another reversal here to push up, or if it's going to push right through and take out these relative equal lows. Given the fact that it is FOMC and it is election week, we are proceeding with caution. We're not looking to take any counter trend trades today, low probability. And this is US oil. Still continuing to push down even further. Let's see if we come all the way back down to the 238 and the 20. Pushing down. We're back to 50%. See if we get a tap here and a push up. Again, if it was any other day, we would just wait for 15 to turn green. And we would take a bounce off of here. But this is a low probability week, very volatile. We're getting that rejection and push up. Now we're back at the consequence encroachment on the other side of that fair value gap. Whichever asset you're trading, make sure you're looking at it on 1, 5, and 15-minute time frames. You can only share so many windows here. So I didn't get the tap that I was looking for. Again, we're still red on the 15. So that's a counter trend for us. Back at the midpoint, back at Asia's fair value gap. On a lower time frame, it has not actually created anything for us to use as a foothold. About 8 minutes left in our stream. One minute, 21 seconds left, getting a pretty big wick there. Again, we can take a look at the 15-minute just to see exactly where those EMAs are at. So price is above the 238. It's not too far off crossing over. Still waiting for a foothold on a smaller, lower time frame. Yeah, see, even what's forming right now is all sitting inside this fair value gap. There's not enough room here for growth. You want to make sure you're able to get at least 1 to 3. Now, it could go way beyond the weekly range here, but during these sessions, we're only aiming between 1 to 1.5 standard deviations, and today we're aiming for 2 just because we know that's where the weekly range is sitting. So there's a foothold in there, but again, not enough for a 1 to 3. And we never got green on the 15, at least not in time. I'm sure it will in a little bit as soon as it hits the 2 standard deviations, but there has to be room for growth. We can't go for these little moves. If you don't see a 1 to 3, then you're risking too much. Please make sure you check us out on fractaleffects.com, where we teach high probability trading. Please make sure you hit the subscribe button, turn on your notifications so you know when we're live. I want to see where this next candle is going to go. We'll conclude there. Most likely we'll use this foothold, at least take out top of the weekly range, but just wasn't enough room there for us. And we'd be counter trend trading, which is fine again, as mentioned before. On any other day, we don't mind a counter trend as long as we have all the confluence. But we had a downside expansion model, red box, red on the daily, 15 still red. You want to at least have the 1, the 5, and the 15 be green if you're going to take a counter trend going against the expansion model. So if you have a bullish confirmation and you're green across these 3 and it's not such a volatile week, then you can always aim for, again, here's the weekly range. So Thursday retraces back to the weekly range. Every day has a footprint, mind you. Make sure you're watching all the videos in the Learning Hub where we go over what each day does in accordance with the strategy. Monday has a specific footprint. Tuesday has a specific footprint. Wednesday, Thursday, Friday. And Thursday's footprint usually brings us back to the weekly range marked out by the aqua lines. Just wasn't enough room. And we will conclude our session there. We'll see you guys again next week. Be safe. Have a good weekend.